Hey everyone, this is Dave from the DocuWealth YouTube channel. Did you know that you can now trade futures directly on Robinhood? This is a feature that Robinhood added in late 2024. So in this step-by-step guide, I'm going to walk you through everything you need to know. Whether you're an experienced trader who's already traded futures contracts before, or a beginner who just wants to find out how this works, I'm going to show you how to enable futures trading on your account, how to place your first trade, and some beginner mistakes that you should avoid. If that sounds like what you're looking for, keep watching and let's get right into it. By the way, I've included timestamps in the description of this video, so if you want to skip the overview and go straight to how to enable futures on your account and then watch me place a trade, you can feel free to do that. But I highly suggest that you watch the entire video because I'm going to be going over every important detail that you should know before you start trading futures. First things first, let's start with a quick overview on what futures contracts are. Futures are a derivative contract that you can trade that allow you to speculate on the future price of an asset. You can choose to trade from a wide range of assets. This could be index funds like the S&P 500 or the NASDAQ, as well as currency or Bitcoin futures, kind of similar to trading Forex or even crude oil or gold. Keep in mind that futures contracts are a leveraged derivative, which allows you to control a large position with a smaller amount of money. This means that both your potential profits and losses are amplified, so trading futures does involve more risk than trading the underlying asset. There's a variety of reasons why you would choose to trade futures instead of trading the underlying asset. A few of the reasons would be, number one, no pattern day trader rule. With futures, you can open and close as many trades as you want in a day. The pattern day trader rule applies to stocks and options. It's meant to protect retail traders from overtrading on margin. The pattern day trader rule states that if you make 4 or more day trades within a 5-day period and your account is under $25,000, you'll be flagged as a pattern day trader and your account can be restricted from further trading unless you deposit more capital. That rule does not apply to futures contracts. Number 2, the ability to open both long and short positions easily, aka the ability to speculate that the asset will either increase or decrease in value. Technically, you can also do this when trading the underlying asset, but shorting is usually easier and cheaper with futures. Number 3, leverage. Futures contracts are a leveraged derivative, which means you are controlling a large position with a smaller amount of money, like I previously said. This means that both your potential profits and losses are amplified, so trading futures does involve more risk than trading the underlying asset. Number 4, preferential tax treatment. Gains from futures trading are taxed at a special 60-40 rate, which means that 60% of your gains are taxed at long-term capital gains tax rate and 40% of the gains are taxed at short-term capital gains tax rate. This is very beneficial in comparison to trading stocks or options, which are both taxed at short-term capital gains if you hold for less than a year. Keep in mind that the 60-40 tax rate for futures is at the federal level, and how futures are taxed at the state level varies from state to state. Keep in mind that I'm not a tax professional or investment advisor, so please seek guidance from a licensed professional if you would like to know exactly how this would work for your personal situation. This video is for educational purposes only, and I'm not making any recommendations. I'm just speaking from my personal understanding on this topic. Number 5, the ability to trade 23 hours a day, from Sunday at 3 p.m. to Friday at 2 p.m. This allows you to trade at virtually any hour of the day, so you can take advantage of more trading opportunities. Keep in mind that trading volume is typically lower during these extended trading hours outside of the New York session, unless there is a big news event. Number 6, wash sales exemption. Futures contracts are generally exempt from wash sale rules. You can look more into this if you're interested. Number 7, mark-to-market accounting. This one is a bit more complicated as well, so I won't get into it in this video, but you can do some research on Google and see how it might be beneficial. And number 8, lastly, there's no Greeks. Unlike with options where you have to look at the Greeks, like time decay, implied volatility, and other metrics that can mess with options pricing, futures is a lot more straightforward. Now, a quick overview of the fees and commissions. Robinhood's fee schedule for futures trading is actually pretty good, typically the same or below market average. Robinhood charges 75 cents per contract traded for non-gold members, and if you have Robinhood Gold, that goes down to 50 cents per contract. There is an additional NFA regulatory fee of 2 cents per contract, and then a variable cost depending on the contract you trade. Typically for index futures, this fee is 35 cents per contract, but this can vary a bit, so make sure you look into this to see the exact cost before you trade. I'll show you where to look into this later in the video. So the total cost you can expect to pay per contract is anywhere from 87 cents to $1.12 per contract, and that gets charged when you buy and when you sell each contract. So double that to see how much you'll pay to execute and close a trade. Let's go over how to enable futures trading on your Robinhood account. As of July 2025, which is the time I'm recording this video, Robinhood has not yet rolled out futures trading to all of its customers, but they have rolled out this feature for most US customers. Either way, to see if you have access and enable the feature, you can open the Robinhood app or desktop version, tap your account button, go to settings, then investing, and at the bottom you'll see futures trading. Tap that. Then you'll be prompted to read through and acknowledge the risk disclosures, and at the end, tap the enable futures button. And then you should be all set and ready to trade. Once futures trading has been enabled on your account, you're going to want to navigate to the search bar and search futures. At the bottom of the menu, you want to click on the Futures button in the List section. This will take you to the entire list of futures contracts that are available to trade on Robinhood. As you can see, there are currently 41 contracts like index futures, crypto futures, energy futures, etc. You can scroll down the list and find the exact symbols you want to trade and click this little plus button to add them to one of your watch lists and make it easier to find in the future. Now, for the contract specs, expiration, and stats. This part is important, so pay close attention to this on whatever contract you decide to trade. Here I have the Micro E-mini S&P 500 futures contract, which is just a smaller version of the regular E-mini S&P 500 contract. If you scroll down a bit, there will be a section called Contract Specs. This lists everything you need to know about a contract. First off, the margin requirement. This is probably the most important. In this case, at the current moment, the margin requirement is $23.63 and 90 cents. This is the minimum amount you need in your account to open one contract. It's recommended that you have more than that though, because if your account balance drops below this during a trade, you could get margin called, which means your position might be forced liquidated to cover losses. Think of this as the amount of your own money you're putting up to control each contract. Next up is leverage. Here, it's 13.38x. You're controlling 13.38x more value than your margin deposit. This essentially tells you how much money you're actually trading with. So in this case, the margin requirement is around $23.50 and the leverage is around 13x. So you do the math, $23.50 times 13x. In this case, by owning one contract, you're essentially controlling around 30K worth of S&P 500 shares. Next, the tick size. Here it's 25 points, but it'll vary from contract to contract. This is the smallest price movement the contract can make. Pretty straightforward. The tick value, $1.25. This shows you how much money your contract moves for every tick. So here the minimum tick is 25 points and every 25 point tick equals $1.25 gain or loss per contract. Next, we got the multiplier. Here it's $5. This means that every full 1 point move in the index equals a $5 change in the value of your contract. This is one of the easiest ways to understand how much you're gaining or losing per point. It ties everything together, the tick size, the tick value, and how much each contract actually moves in dollar terms. So if the contract is priced at say 6,300 and it moves to 6,301, that's a $5 move per contract. Trading hours. This is the same for all futures contracts. Like I said previously, 3 p.m. to 2 p.m., 23 hours a day, 5 days a week. From Sunday at 3 p.m. to Friday at 2 p.m. Futures close for 1 hour each weekday from 2 p.m. to 3 p.m. for maintenance. Settlement type, cash. This means that you're not taking physical delivery. Profits and losses settle in your account as cash. And finally, the last day to trade, September 19th, 2025. This is the contract's expiration date. You'll need to close or roll the contract over by this date. If you scroll up to this little area above the name of the futures contract you're looking at and click on this little drop down, you can see which contract you're trading. So this is the September 2025 contract, and as we get closer to that expiration, if you're holding a position, you can either roll it over to the next expiration, or you would just want to close the position and trade the contract with the later expiration. Keep in mind that if you want to roll a contract over to the next expiration, there are fees involved with that, so please look more into that before rolling a contract. If we scroll down a bit more, you'll see a small area that says stats. This will fluctuate in real time and will give you a little bit more details on the contract you're trading. It'll show you what the current bid and ask are, what is the high of day and low of day, how much volume has been traded today, and what the previous settlement is. Now, for placing a trade. To place a futures trade on Robinhood desktop, you simply go up here to the top left area, select buy or sell based on if you want to go long or short. You then select the order type. You can choose between limit order, market order, and stop order. If you're placing a limit order or stop order, you select the price. Then type quantity. For this example, we're just going to select one contract. And then if you're placing a limit order or stop order, select whether the order is good for day or good till canceled. Then over in this area, we can see the estimated buying power effect, which essentially shows you how much money you're putting up to hold this contract. It'll also show you the commissions and fees. Here it says 87 cents. That's because I have Robinhood Gold. If we hit this little drop down box, it'll show us a more detailed fee breakdown. As you can see, 50-cent total commission and 37-cent total regulatory and exchange fees, bringing the total up to 87 cents like I mentioned. Keep in mind that these are fees to buy one contract, so when I sell this contract, I'll be charged those fees again. So essentially, I'm paying once I buy the contract and once again when I sell the contract. So the total fees paid once I close this trade will be 87 cents times 2, which is $1.74, and that's for each contract traded. Then you would simply hit review order and then click buy, or hit edit to cancel, and now you can go back and make changes or just forgo placing the trade entirely. Now, for actually placing and monitoring the trade, we're going to switch to the mobile app because I find it easier to place trades using the app. And I also want to show you how the trading ladder works, and that feature is not available on the desktop version as far as I know. So I've now switched to my phone and we're here on the Robinhood app. As you can see, I have the same Micro E-mini S&P 500 contract selected. As you can see up top, you can change the contract expiration if you want to, just like on the desktop, but we're going to stay on the September 2025 contract because that's the expiration I want to trade. If you scroll down a bit, you can see the contract specs and stats, same as on the desktop version. To place a trade, hit the trade button, then you can choose between buy, sell, or ladder. If you hit the buy or sell button, it's basically the same as on the desktop, but for this example, I'm going to show you how to trade using the trading ladder. So let's hit the ladder button, and that opens up the trading ladder. This shows us the bid and the ask, as well as the spread if there is any. These index contracts have quite a bit of volume and liquidity, so there's usually no spread between the bid and the ask. As you can see, the price is constantly fluctuating, and in my opinion, this ladder view allows us to get a cleaner entry or exit on a trade. If you hit this quantity button, you can then hit the plus or minus symbol to increase or decrease the amount of contracts you want in your order. Then you can simply hit buy market to go long at the market price or sell to short at the market price. Additionally, if you want to get a bit more exact and avoid slippage, you can simply tap the screen on the bid or ask side to create a limit order for the exact amount of contracts you selected. Then the order will execute once the market reaches that price level. If you hit the settings button in the top right, it'll show you a few more order settings, like auto send, which I recommend you turn on. That just allows you to place trades quicker without needing to swipe up to confirm your order. And then the time enforced to signal when you want your limit order to expire if it doesn't get filled. You can choose between good for day or good till cancelled. Now in this instance, I'm just going to go long. So I'll tap on the bid here at 6,328.75 cents and then hit the buy limit button. And boom, the limit order for one contract has been placed. Now, as the price fluctuates here, the order should fill. And as you can see, the order just got filled there. Now, while we have the trade open, a few things will show at the top. The day P&L, the trade P&L, as well as the pending orders. As you can see in the middle there, that's the current trade P&L. It'll show the fill price, and that fill price will also be marked on the screen with a dotted white line. While the trade is open, you can select any price level and open more orders at a price you want to close the trade, whether that's above or below the price you bought, so you can quickly set take profits and stop losses. Keep in mind that I'm placing limit orders to sell contract on the ask side of the ladder because I went long, but if I had gone short, I'd be placing limit orders on the bid side instead, since I need to buy to close out a short position. I could also add to my position during the trade by placing more orders on the bid, and that change would be reflected at the top. It would show +2 contracts and the average price that I got filled at between the two trades, and the dotted white line would then move to reflect that change on the ladder. So now I placed a buy order above my fill as a take profit, and let me place one below as well as a stop loss. Keep in mind that this order below my fill is a stop order, which means that it will market sell and fill at the highest price possible. So there may be more slippage on this stop loss versus the limit order I placed above my fill, higher up on the ladder, which will sell at the exact price level that I selected, since it's a limit order and not a stop order like this one below. During the trade, you can hold one of these orders that you placed and swipe to the right or left to cancel the order, which I just did there. Also, I want to mention that this circle with a slash through it at the top of the screen is pretty much an emergency button. If you hit that button, Robinhood will sell all of your open contracts at market price to close out of your trade and cancel all pending orders that you may have placed. That's a feature that's good to know about, and I believe it's there to use on the desktop version as well. And now, since I'm in a little bit of profit, let me just send a limit order at the current price level and hopefully it fills. Boom, as you can see, the order just filled and I made $5 on that quick trade. Now, keep in mind, the day P&L only reflects the profit and losses from the trades that you took, but it doesn't reflect the fees. So make sure you keep track of those manually if you want to be fully sure of your profit and loss. To access your trade history, you can simply exit out of the trading ladder and then scroll down on the contract you traded, and right there, it'll show you a detailed breakdown of your order history, and this section will also include the fees as well. So as you can see, the day P&L said I was up $5, but in fact, if we include the fees that I was charged to buy and sell the contract, it would be $5 minus $1.74, which means $3.26 was my net profit for the day after fees. In the trade history, you can also tap any of these orders to see the order details like the quantity, price, order type, etc. Keep in mind that the trade history is specific for each contract. Robinhood will also send you daily and monthly future statements with a lot more details on all the trades that you took during that period, like a detailed breakdown of your P&L, fees, all contracts traded, and more. That's probably the best way to track your net profit and loss in my opinion. You can also access these statements by going to the Reports and Statements tab in your account settings. Also, please note, if you use TradingView as a charting platform before you trade, keep in mind that there's a 10-minute lag between the futures price action and the TradingView chart if you're using the free plan. If you want real-time data, which is super important if you're trading futures, that's provided directly by CME Group to TradingView as part of a paid subscription. Just something to note, you can look more into that if that applies to you. Lastly, I just want to reiterate and give a final warning that futures trading can be risky and the leverage involved can amplify profits and losses, so please exercise caution, use proper risk management, and don't trade with more money than you can afford to lose. With all that being said, I know this was a longer video, but I hope seeing this step-by-step guide was helpful and taught you everything you needed to know. Please feel free to ask any questions in the comments section below, and I'll do my best to respond. If you got value out of this tutorial, please hit that like button and subscribe to the DocuWealth YouTube channel for more helpful content like this. And if you haven't already, click the video that's on the screen now to watch my previous video about dollar cost averaging versus lump sum investing, where I explain the pros and cons of each approach and which one is better overall. The answer might surprise you, so watch the video if you want to find out.